Okay, there. Hi, good morning, everyone. So, welcome to our officially our last session before our midterm. So, as you may know, reading break tayo next week. And therefore, this would be the last session that we'll have. So, for today's lesson, we're gonna be talking about mastering inventory in the lens of all of the exercises that we've submitted. Um, for chapter 6. Before anything else, just wanted to make sure that everyone can see the screen and that the audio is clear. Kindly thumbs up na lang if everything's okay. Got it. So thank you so much, everyone. So I saw that a lot of people or in class actually submitted for chapter 6. Apologies. Ngayon ko lang na-realize that there were some questions or clarifications because I think there were some typos in terms of the exercises. So don't worry for items that have typos and also particularly for those that we didn't discuss in class. In terms of checking, I'll be more lenient in terms of like awarding the full points regardless whether you got the right procedure or not. But I'll be very strict in terms of like yung the ones that we've already discussed. So basically inventory inclusions and also cost flow assumptions. So with that said, let's officially begin our exercise breakdown for chapter 6, which is basically revolving around mastering inventory. So again, just to summarize all of the key points, if you have to have like a checklist in order to make sure that you do well in your quiz regarding chapter 6, these are the things that you should look out for. So number one, you should be an expert in terms of recognizing inventory. So understanding that there are different classifications of inventory, whether you're a manufacturing or a merchandising company. And then second, you really have to be a master on inventory inclusion. So you have to be good at analyzing every context and every situation so that you can apply the legal test in terms of determining whether this sort of inventory should be included in your count, right? And then from there, we're gonna be taking a deep dive in terms of a lot of concepts regarding inventory and accounting for it. So number one, we know that inventory initially is recognized at cost. But the problem is sometimes the cost per purchase depends on the time that you buy it. And therefore, we're very dependent in terms of the timings and also the cost flow assumptions that you'll be taking into account. So you should be a master at the four, particularly the specific valuation, FIFO, LIFO, and the average method, or what I call WAVE. And then aside from that, we're gonna be talking about the four other topics. So again, the meat or the chunk of the chapter 6 would really be cost flow assumptions. But then equally important would be the subtopics of inventory valuation, estimation methods, inventory errors, financial presentation, and then again, recognizing inventory, right? So with that said, we're gonna be taking a look at it from a very practical standpoint for today. So basically, we're gonna break down our inventories. And as usual, before we tackle or before I ask other people to recite, let's take a review first in terms of the concepts, right? So the very first thing that we have to master for chapter 6 is in terms of recognizing inventory. So in terms of recognizing inventory, there's really just three things that you have to understand, right? That number one, inventories have a very strict definition, but in terms of classification, it varies depending on the type of company that they have. Second, I won't go through this not today, but we already discussed just in time. So kindly make sure that you're just familiar with the concept and understand what's the difference between just in time inventory management. And then for this particular subtopic, I'll really be focusing on inventory inclusions. As you can see, yun naman yung lumalabas sa exercises. So again, inventory's definition is very comprehensive. So again, kindly memorize this or familiarize yourself. That based on IAS 2, assets that are held for sale in the ordinary course of business or finished goods, those that are in the process of production or work in process, and those in the form of materials or supplies to be consumed or raw materials are considered inventory. So this is the strict definition of what an inventory is. Now, we move on to ano ba yung mga different classifications of inventory. Again, it depends on the type of company. On the left side, you have your merchandising companies. And under merchandising companies, wherein their business operation is basically they'll buy an inventory or they'll buy a merchandise and then sell it without, doing any other thing to it, then yung inventory classification nila would primarily be merchandise inventory. On the other hand, for manufacturing companies that buy raw materials, like for example, again, with the pizza, right? You buy the ingredients, you cook it, and then that's when you have your finished goods, the food that you sell. So for them, they actually have three classifications of inventory. So all of these are still inventory, and you add all of the raw materials, the work in process, and your finished goods. If someone will ask you, what is the inventory for this company, right? So with that said, we're done now with the first two theory parts, right? Of the definition, the just-in-time inventory management. Again, we're gonna go now to the major subtopic, which would be inventory inclusions. So I'm sure nalalabas to in the quiz and also the midterms. So again, for inventory inclusions, isa lang naman talaga yung tinatanong niya. Which goods should be included in your inventory account? And our framework to answer this question will be what we call the legal test. That you ask yourself, is the entity the owner of the goods? If yes, that they have the title, regardless kung na kay customer man yan, regardless if it's in transit, regardless kung you're selling or purchasing depending on the shipping or maritime points, as long as you still have the title, then that should still be included, right? Now, if you're not the owner, regardless kung hawak mo or nasa warehouse mo, it still should not be in part of your ending inventory. It should be excluded. So we actually summarized it. So this is the bare minimum na you memorize what are those that should be included. But ideally, you should master the legal test. So basically, goods on hand, owned and on hand. So basically, make sure na alam mo na yung pag-consigned goods, if you're the consigner or you're the owner of the goods, then you include it. But if you're a consignee or hindi mo ari yung goods, then you should not include it. Sa goods in transit, again, we like PSP, right? When you're purchasing, so you're the POV of the buyer and it's a shipping point, technically, while it's in transit, it's already yours. So pag PSP, it's included. Pag SDP, or if you sold the goods, so POV seller, and then destination point, in transit, technically sa'yo pa rin yun. And therefore, it should still be included. And then, again, be aware when the transfer of ownership happens, well, regardless kung shipping point or destination point. Kapag, regardless of the parang destination point or shipping point, kapag hindi pa yan napipick up sa warehouse nyo, nung shipping company, walang magkakaroon ng transfer of title regardless of shipping or destination point. So be aware of those nuances. Yun yung mga dadali sa inyo sa inventory inclusions. Parang you'll see something that's weird. And then hindi mo pa nalaman or hindi mo pa alam kung whether it should be included or not. Right? So finally, we have our own goods temporarily held by others. So in the hands of salesman or held by customer on approval. So yun, I tried to summarize some scenarios na as long as it fits the criteria, then it should be included. So again, let's master inventory inclusion. So actually, I already discussed one of the exercises given. So we had the McHale correcting inventory. And again, when it comes to inventory inclusions, we follow this 3-table framework, right? So in terms of this framework, I basically call it the carve-out add-back framework, wherein you have 3 tables. Basically, your main table would be your ending inventory. So this is where you'll keep whether tataasan mo ba or ibababa mo yung current year-end inventory niya, right? The second table is just to help guide you kung ano dapat yung effect. So you just ask yourself, from the point of view of the accountant, did they include the goods? Yes or no? And then you step back and then you ask yourself, should it have been included? If yes or no. And then regarding, dependent on these two outcomes, you either carve out or you add back, right? So with this, I'll just quickly go through again McHale ending inventory. So point one, they had consigned goods and then they included it in the account. But in reality, they should not have included this consigned goods because again, they're a consignee, right? So regardless, even if you have the physical possession, if you don't have the legal title, then it should not be included. Therefore, they included it, but it should not have been included. So logically, you have to carve out. So it's already part of the 740,000. So we have to subtract 250,000, right? So moving on, we have purchase FOB destination, right? So this is PDP, right? And PDP, or hindi siya PSP, right? Therefore, it should not have been included. And good thing, hindi nila sinama. Therefore, if it's not included and it should not be included, then we ignore, right? So no effect. Next, we have office supplies na na-include dun sa inventory card account. Should supplies be part of inventory? The answer is no. So number one, is it included? Yes, they included it in the account. But should it be included? No, right? Therefore, if it's included but it should not have been included, then we carve out. So we subtract 17,000 from the 740,000 kasi may nasamang supplies dito. And then again, nagkaroon tayo ng sale. So SSP, did they include it? No. Should it be included? Yes. Why? Because in this sale, the shipper picked up the goods on January 1. Therefore, our POV or our timeline is we're currently at December 31. We're looking at ano ba yung ending inventory mo at December 31. Now, we know that the transfer of title happens when the shipper picks up the goods kapag shipping point. So technically by January 1, hindi mo na-ari. But even though the maritime shipping terms are sale shipping point, that's generally, it should not have been included already. We have to go beyond that. We have to understand na wala pang transfer of title na nangyayari. And therefore, this is a very unique item that kahit shipping point, it's still included because hindi pa siya napipick up. Yun basically yung logic here. And because it's not included, but it should have been included, we add back 30,000. And then, we had sales return na parang we were only supposed to sell 8,000 worth of goods. But then we thought we actually sold 60,000. So logically, parang what happened was, nagkaroon na sila ng cost of goods sold or they subtracted their inventory by 60,000. When in fact, they should have only subtracted it by 8,000. Kaya 52,000 yung lumabas. Why? Because, how did we get 52? We had 60,000 na we thought we sold. Pero in reality, it was just 8,000 that we sold. And therefore, we have to add back the 52,000 that we subtracted in order to get the correct balance. And then finally, obsolete items. Was it included? They included it. But it should not have been included. So again, take note, this is a new item. So item 4 and item 6 should give you new understanding na kapag obsolete, it should not be included and therefore we carve out 40,000. So basically, we summarize lang the effects. So 740,000 minus 250. So basically, this is just 740 minus 250 minus 17 plus 30 plus 52 minus 40 is 515. So we get our ending inventory of 550, right? So this actually ends the second exercise. So now let's move on to another example. So basically, I showed you parang ano yung framework. For this item, is there anyone who wants to answer 6.1b for inventory inclusions? Kung wala, I will call people. We can go LV. LV, were you able to answer 6.1b? Right. Sorry. Hi, Lance. Are you there? Or should I call someone else? How about... there. Okay, si Soph na lang. Yeah. Okay. So for this, so basically we'll just apply the same framework that we'll be using for inventory inclusions, right? So we'll take it per line item. So basically, since wala namang binigay na ending inventory, I put it at 0. And then we'll analyze it per transaction. Okay. So number 1, basically we ship goods costing 800 to a customer, and it's an FOB shipping point. So my first question would be, is it included in the count or not?
Sir, no po.
Yeah. So for this particular item, parang hindi siya sure. So basically, hindi niya nilagay lahat, right? So all of it naman would not be included. So my question would be, more importantly, should sale shipping point be included? Should it be included?
No din po, sir.
Yep, correct. And therefore, we ignore and walang effect, right? So next transaction, it's a purchase FOB shipping point, right? So they didn't include it, but should this be included in the count?
Yes po.
Okay, got it. And therefore, what would be the effect? So what would we need to do in order to account for this?
Add back $480 po.
Yep, correct. So $480 because 450 yung purchase, and then we had a freight in, right? Because again, shipping point, we pay for the freight. Yep. Good job. Next transaction, there was a designated goods to the customer. So again, they did not include it. Pero should this be included kaya?
Yes po.
Correct.
Yes,
Correct.
sir.
So therefore, what would be the net effect for this?
Add back $650 po.
Yep, correct. So again, kindly take note, number 3 is very important, that even though it's designated for a customer, you're still the owner for this, right? Number 4, included in Captain Hook's warehouse is 700 of inventory. So this is consigned goods, but we're a consignee. So should this be included?
No po.
Right, correct. And therefore, we just ignore, right? And then number 5, magkaroon naman tayo ng purchase FOB destination. Include or not include this one?
Not include po.
Correct. So therefore, wala rin. And then finally, the last one would be a sale FOB destination point. Would we include or not include this?
Include po, sir.
Got it. Yeah. So SDP. And therefore, what would be the net effect for this? So
Add back $200.
yep, correct. So this is good. So again, be careful. So learning natin. So thank you so much. So very helpful. So ganun lang. It's very simple, very straightforward. In essence, you have to be careful also in terms of reading comprehension. So sa inventory inclusions, honestly, reading comprehension lang siya. Dito binigay si invoice price, but then again, we always look at the cost, right? So pag ending inventory, we only look at the cost, right? Or the NRV, which will be discussed later. Right, so this is the answer. So we're done with inventory inclusions. And then we'll go to cost flow assumptions quickly lang, right? So in cost flow assumptions, basically, again, ang very important thing na lang that you have to note is that there are only 2 things that's very important in inventory. The quantity of the products and primarily the cost of the products. And therefore, as evidenced by our quizzes and our exercises, super important that you understand the cost flow, right? that beginning inventory plus cost of goods purchased. So cost of goods purchased is a very meaty subsection. So cost of goods purchase would be comprised of your purchases, less your PRA, less your purchase discount, which will give you your net purchases. And then you add freight in to get your cost of goods purchased, right? But in essence, simply, beginning inventory plus purchases would be your cost of goods available for sale. And then your cost of goods available for sale, dalawa lang naman yung mangyayari dyan. Either you sold some of portion of it, and therefore it will become a cost of goods sold, or hindi mo nabenta. Pag hindi mo nabenta, magiging siyang ending inventory. So for cost flow assumptions, we're just basically looking for two things. What is our COGS and what is our ending inventory, guided by our knowledge of what our COGAS would be, right? So this is again is a very simplified cost flow matrix, but then please be aware that sa cost of goods purchased, it's a very meaty subsection, right? So in essence, in terms of the cost flow assumptions, the very first thing that we wanted to answer was, bakit ba kailangan ng cost flow assumptions? And then, we proved this with the scenario na, honestly, hindi naman kailangan ng cost flow assumptions if your cost per unit remains the same every time you have a purchase. So as you can see, pare-pareho lang yung cost per unit nila. So when we have our cost of goods available for sale of 600,000, we just basically multiplied the 30 units or the quantity to the cost per unit of 20,000, right? To get 600,000. And then this 600,000, again, there's only two things that will happen to our COGAS. You sold 16 units, and therefore 16 out of 30 will become your cost of goods sold. And therefore, the remainder will become your ending inventory. So there are two ways of solving. So either 16 times 20,000 is 320,000. And then your ending inventory mo is either just carve out the 320 from 600. So 600 minus your COGS will be your 280. Or you can just manually solve na 14 units yung natira, so times 20 units, right? So again, very important that you really master na gets nyo that COGAS, COGS, and ending inventory has a very important relationship with each other. So with that, we then showed you na in real life, that does not happen. That the cost per unit changes. And the classic example is, pag nagkaroon ng changes in the foreign exchange rate, right? Na pag humina yung peso and lumakas yung dollar, tumataas yung cost per unit natin. And therefore, hindi na natin alam paano iaano yung cost of goods sold or yung ending inventory. And this is where our cost flow assumptions will come in. Na pag nag-iiba yung cost per unit, the cost flow assumptions will be able to help us identify ano ba yung cost of our ending inventory and what should be our cost of goods sold, right? So there are four things you have to master. Specific identification, FIFO, LIFO, average cost, or I like to call it WAVE, right? So for specific identification, for theory, kindly make sure which are the types of companies that are most likely to use specific identification. And here, hinighlight ko na that it's limited variety of high unit cost. But basically, for specific identification, how it works is that every item has a unique tag that at the end of the period, when you do your physical count, you can specifically identify na itong particular na drone na to, this is the drone of DJI 11, right? And then you'll be able to track, so this is the specific identification, and for this batch, ito yung cost per unit niya. So manual mo siya gagawin, right? And then, basically, you'll be able to get your ending inventory by multiplying the number of units na natira, so 4 sa batch 2, and under batch 2, the cost per unit is 30,000. 4 yung natira sa batch 1, so 20,000 yung cost per unit dito, and then 6 yung natira sa batch 3. So you'll be able to get your ending inventory. And then, since you know your ending inventory and you know your cost of goods available for sale of 900,000, then you just know that you carve out 440 from 900 to get the cost of goods sold for 460,000. So before I proceed to FIFO and LIFO, are there any questions regarding specific identification? Okay, wala. So with that said, we can proceed na to FIFO. So again, for FIFO, basically, I want you to remember the term FIFO-lish, right? So first in, first out, meaning that when I sell a good, I assume that the goods na I'm selling is the very first one or yung pinakaluma kong goods, right? The very first in will be the very first out, right? So first in, first out. So meaning the term FIFO will refer to your cost of goods sold, right? So when I'm computing for my cost of goods sold, I will look at the earliest purchase. Conversely, if I'm looking at my ending inventory, kung yung first yung unang nabebenta, then last is still here, right? So FIFO-lish. First in, first out refers to your COGS. Last is still here refers to your ending inventory. And the reason why we super love FIFO is that it will result to the same ending inventory regardless kung periodic or perpetual. So visually, we have 3 batches. We have the beginning inventory in September 1, we have purchase September 9, and we have purchase 2 in September 15. Under FIFO, the assumption is kapag nakabenta ako ng 16 units, I assume na yung first in yung mag-first out. And therefore, 16 yung kailangan kong ibenta. So titingnan ko si batch 1, 10 lang siya. So meaning, 10 out of the 16, I'll assume came from the first in of batch 1. So 16 minus 10, may 6 units pa ako natitira. So I move on to the next purchase, purchase 1. So now, I know that 6 out of the batch 2 was sold. So therefore, how I compute it is 10 units times 20,000 would be 200, and 6 units times 30,000, which will give me my COGS of 380,000. So since alam ko na yung COGS and COGS, I can just easily get 520 by 900 minus 380 is 520. Pero for the sake of analysis, tingnan naman natin yung baliktad. We're looking at ending inventory. Kapag FIFO-lish and we're talking about ending inventory, last is still here. Meaning, yung pinakabagong units are still here. So, how many units yung natira? 14. So, I'll look at the last batch. So, last batch is still here. So, 10 out of the 14 is still here. So, may kulang na 4 pa. So, I'll assume na yung 4 will be the coming from the second batch. So, 4 out of 10 yung still natira. Ganun. So, basically, that's how FIFO-lish works, right? So, sa LIFO fish, ang importanteng malaman dito is that baliktad lang yung assumption. If ito, FIFO, first in, first out, sa LIFO, last in, first out, right? So, when you're looking at our COGS, kapag nakabenta ko, I'll assume that it's the newest goods na I purchased that I sold. And then, conversely, if I'm looking at my ending inventory, then it's gonna be the oldest that will still be here, right? So, first is still here. So, one of the main differences between FIFO and LIFO is that LIFO will give you different ending inventories. And as you know, LIFO is not accepted in generally accounted principles, right? Because it's easy to manipulate. So again, same scenario, pero iba lang yung assumption. Basically, when I sold 16 units, LIFO, last in, first out. Meaning, I sold 16 units, pero rather than think na sa batch 1 manggagaling, it will be in the last batch. So 10 out of the 16 will come from batch 3. And then yung natirang 6, I'll look at the next batch na pinaka-bago, right? So 6 out of 10. And I'll get 580,000. And then yung ending inventory ko naman baliktad. First is still here. So I look at batch 1 for 14 units. So 10 out of the 14 units come from batch 1. And 4 out of the 14 units will come from batch 2, right? So that ends LIFO fish, and then we have the average method. So again, kindly take note. Kapag periodic, we call it weighted average method. Kapag moving average, it's perpetual. So this is an example of periodic, right? So this is wave na periodic. And it was saying na it's kind of weird na you assume na it's coming in the first batch or the last batch. Ang gawin na lang natin, let's get a wave or a weighted average unit. Now we know that the COGAS is 900,000. Now we get the average, the number of units, which is 30 units. So technically, it's 30,000 per unit because 900,000, the COGAS divided by your total units would be 30,000 units. And then you just apply it to the quantity. Yung isa 480 and yung isa 400. Right? So again, this is just a summary of the differences. So take note na this is very important in theory and multiple choice. That you will always have the same COGAS regardless of your cost flow assumptions. All of it will still be 900,000. Ang mag-iiba is the cost of goods sold and the ending inventory, right? And kindly take note that in the period of rising prices, your ending inventory for FIFO will be very high and your gross profit will be very high. For LIFO, it will be low. And then for average cost, it will be average. And then, baliktad. In the period of decreasing prices, your FIFO will have the lowest ending inventory and gross profit, but your LIFO will have the highest, right? So, again, just think of it as FIFO follows the flow. So, tumataas si prices, so mataas si ending inventory and si gross profit. Baliktad naman si LIFO. LIFO goes against the flow. Tumataas si prices, bababa si ending inventory, bababa si gross profit. Again, very important to sa theory. So, kung hindi nyo magets yung logic, I'd suggest you memorize these tables, right? And then you just summarize the illustration that we had. So basically, we had these 4 assumptions and then kindly note na si LIFO is not accepted. Another thing important to know conceptually is that about the consistency principle. Once you follow the cost flow assumption, you're expected na you're gonna apply it year on year, right? So pag nag-iba ka ng cost flow assumption, it's gonna be a required disclosure. So again, very important to understand consistency principle for theory and multiple choice. So in summary, we have 4 assumptions. Very specific identification is just manually computed. So we technically have 7 methods. So we have FIFO, tapos meron siyang perpetual periodic. May LIFO ka na again may perpetual, may periodic, and may wave ka. Kindly take note that FIFO generally has the same results. LIFO generally has different results if perpetual or periodic. And wave has generally different results also, right? So that ends the theory portion of cost flow assumptions. Now, for the sake of time, lahat ng cost flow assumption exercises, I'll be discussing at the end. I want to focus on the things that we weren't able to discuss last lecture, right? So in terms of theory, let's again move on na to inventory valuation, right? So basically, yung cost flow assumption helps us with initial recognition. So initially, you'll recognize your inventory at cost. So again, in initial recognition of inventory, we initially recognize them at cost using the cost flow assumption. So now let's go to the next step. So let's say you bought inventory January, February, March. Initially, they will be recognized at cost. Let's move to the end of the period. Let's say the end of your period is March, right? Now, every time you have an ending of the period, you have to subsequently value your inventory, right? And inventory should be subsequently valued at what we call LCNRV. So it sounds complicated, right? But it's literally lower of cost and net realizable value. Meaning, when you are subsequently valuing your inventory, you ask yourself 2 things. What is the cost of this inventory? What is the NRV of this inventory? And then I will value it at the lower. Kung mas mababa si cost, then I'll value it at cost. Kung mas mababa si NRV, I'll value it at NRV, right? So LCNRV sounds intimidating, but then the framework here is that you identify your cost, you identify your NRV, and then basically value it kung sino yung mas mababa. Lower of cost or NRV, right? And therefore, the first question is, what will comprise our cost? Well, usually, your cost will be the one that you calculated using your cost flow assumptions, right? But in essence, the strict definition of a cost will be a cost of an inventory will have three different components. Your cost of purchase, your cost of conversion, and your other costs incurred. So under cost of purchase, we're very familiar with this. It's purchase price less trade discount, right? Irrevocable taxes, transportation costs, so freight in adds to our cost of purchase and handling costs. So this is more theory, but kindly make sure na you familiarize yourself. Now, all of this are the cost of purchases, and therefore, it would be part of the component of the cost of inventory. Cost of conversion, you have your labor and fixed and variable overhead costs, and other costs incurred, like costs to bring to present location and condition, and borrowing costs. So basically, there's a lot of terms, but the cost of inventory is just the cost of purchase plus the cost of conversion plus other costs incurred, right? So that's the first component. What is the cost? Let's move on to the second component, the net realizable value. And the net realizable value is computed as follows. It's estimated selling price minus estimated cost of completion minus estimated cost to sell. Okay? So in terms of mastery, make sure you master what are the definitions of a cost, what are the definitions of an NRV, and what does LCNRV mean. So generally, we subsequently value inventory at LCNRV or lower of cost or net realizable value. So some things to take note, but then not as important. Take note that some costs are outright expense. So pag abnormal wastage, freight out, admin overhead, after sales warranty, interest cost, all of these are outright expense. They are never inventoriable. So kindly take note of other inventoriable costs, right? So for this subtopic, let's look at an example. So for inventory valuation, let's basically solve for the LCNRV. So is there anyone in class who wants to answer this, or I'll call another person kung wala? Is there anyone who wants to answer 6.1? If none, Denise, can you help us answer 6.1? Hi. Hello, Denise. Sorry. Are you there or wala? If Denise is not here, we can call on Kirsten. Kirsten, are you here? Okay. Parang wala ata. Rin. Okay. So kung wala, if the one wants to recite, I will just answer LCNRV. Okay? So we'll just go through LCNRV. So again, for LCNRV, you're given this table, right? And for LCNRV, we basically just have to ask ourselves three things. What is the cost? What is the NRV? And which one of them is lower, right? So in the scenario, in Ladaga, basically, you have 4 products. And yung given lang sa inyo would be 4 things. The original cost, the cost to replace, the estimated cost to sell, and the expected selling price, right? So with this, we're down with 1. So alam natin yung original cost of these products. So product 1, it's 60. Sa product 2, it's 70. Sa product 3, it's 80. And then sa product 4, it's 90. Right? So with this, the next question is, what is the NRV of each of the products? So how do we solve for NRV? We go back to the definition. The NRV is the expected selling price minus the expected cost to complete minus the expected cost to sell. So now you'll ask me, bakit may cost to replace? Well, honestly, pampalito lang siya, right? So for this particular item, it teaches you how to compute for your NRV. So how do we compute for NRV? For those that want to answer in the chat, you can solve with me. Pero let's look for the NRV for product 1, right? So for product 1, the NRV would be estimate. We start with selling price 100 minus the cost to sell, which will give you 90. We ignore the cost to replace. So that would be we ignore the cost to replace, and therefore our NRV would be 90. Correct. For item 2, it's just basically therefore 120 minus 20, 100 yung NRV niya, 60 minus 10, so selling price minus cost to sell, naging 50, and then 90 minus 20, so 70. Right? So we have these as your NRV. Now we're done with the identifier cost, identifier NRV, and then literally the most basic thing that you can do is that you determine which one's lower. Item number 1, which one's lower? Cost of 60 or NRV of 90? Obviously, 60. Item 2, which one's lower? Cost of 70 or NRV of 100? Si cost pa rin. Item number 3, cost of 80 or NRV of 50? Si NRV, yung lower. So 50. And then, item number 4, cost of 90, NRV of 70, which one's lower? 70. And therefore, for each of the items, we were able to get the LCNRV of each item. So therefore, if I ask, or in the solutions, if they ask you, what is the ending inventory? You will have 60 for product 1, 70 for product 2. Both are at cost. And then product 3 and 4 are at NRV naman. So plus 50, plus 70, you'll get an ending inventory of 250. So again, this shows you that your ending inventory is subsequently valued at your LCNRV, or lower of cost and then realizable value. Right? So we're done with 6.1. So very straightforward. So again, it looks easy. Pero if you check Waygun, if you check Valix, there are different items. For example, some companies would classify it per batch. Or parang meron silang mga different ways of solving for LC and RV, but the concept remains the same. Now, I will leave it up to you to find those items in your Waygun and your Valix. If you ask me, if you show me a question type, I'll gladly solve it for during the reading break. So I'll include it in one of the things that I'll be discussing during the reading break, right? So before I move on to estimation methods, is everything clear about inventory valuation? Kindly thumbs up if everything is okay. Okay, perfect. So now, we go to estimation methods, right? So the next subtopic is estimation. So now the question is, why do you need to estimate the value of your inventory? Parang, don't you have like systems so that you understand like the exact count? Or parang, don't you just conduct like a physical count to determine kung ano yung value ng inventory mo at a certain point? That's true. But for special scenarios, there are sometimes a need to estimate items or your inventory. right? Why? Number one, for example, knock on wood, nasunugan yung factory mo. So nawala yung inventory mo. Or nabaha. Or nanakawan ka. So you can't conduct the physical count on parang what should have been the ending inventory, right? Another thing is that, okay, you conduct your physical count, pero in your physical count, parang you feel like it's lower than it should have been. So parang you test the reasonableness, right? Kasi for example, nanakawan ka, hindi mo naman alam na nanakawan ka kung magaling yung magnanakaw. So in order to test your physical count, you should be able to know how to estimate the value of what should have been the physical count so that you can compare. If it's really near, then you can be confident na, okay, baka siguro iba, parang ilan lang yung nawala. Pero if it's like 50% difference, then you know na parang seems to be a problem, right? And then the final reason is that sometimes you make interim financial statements and therefore you need to get the ending inventory. Pero sobrang hassle to do a physical count every time you're asked to do an interim financial statement. And therefore, it's easier to estimate. So now that we're clear in terms of why do we need to estimate, we go na to ano ba yung hihingiin sa inyo? In estimation, the question that we're asking is, how can we estimate the cost of goods sold so that we can get the ending inventory? There are two methods to estimate the value of inventory. You have the gross profit method and you have the retail inventory method, right? So again, there are two methods to estimate. Gross profit method, retail inventory method, right? So let's first go to gross profit method. So let's understand the underlying process. So under gross profit method, basically, you know naman yung gross profit rate, right? So we use the gross profit rate to estimate our cost of goods sold. And then once we know our cost of goods sold, then we can subtract it from our cost of goods available for sale to get our ending inventory. So in summary, what will happen in the scenario is that you know your cost of goods available for sale or your COGAS, pero hindi mo alam yung ending inventory mo on your COGS. So under gross profit method, we estimate the COGS using a gross profit rate. And then now that we know the COGS, it's just basically COGAS minus COGS equal to ending inventory. So for this, we usually use the gross profit method to test the reasonableness of the ending inventory amount. So we know gross profit rate. Again, gross profit rate is gross profit over net sales. Very straightforward. Now, ang nag-complicate is that your gross profit rate can be based on sales and based on cost. So basically, parang bibigyan ka ng given and then sabihin nila, this is the gross profit rate based on blank. So either it's based on sales or based on cost. So under gross profit method, there are two scenarios. There is a percentage markup on sales and there's a percentage markup on cost. So this, the one on the left and the one on the right, is the general theory. Pero I know na parang it looks confusing. Parang, what are the X%? What are the 100%? Right? So, for gross profit and retail inventory, it's easier to look at it from a practical standpoint. So, let's apply, right? First scenario, they said that you have 60% gross profit rate based on your sales, right? Based on your sales. So, this is scenario 1. So, basically, what happens is that you have your net sales, your COGS, and your gross profit. 60% gross profit rate means that yung 100% refers to your net sales. So yung 100% is the net sales and yung 60% is on the net sales. So let's test, right? If yung net sales is the 100%, 60% gross profit rate on sales means 1,000 times 0.6. Your gross profit is 600, right? So 60%. Conversely, since 60% is gross profit and net sales minus gross profit is cost of goods sold, we know that 40% refers to your cost of goods, right? And pag based on sales, ang mas importanteng number is yung 40%, right? Ang tawag natin sa 40% na to is your cost ratio, right? Again, paano natin nakuha yung 40% cost ratio? We know that based on sales, ang 100% si sales. Alam natin na 60% si GP rate. So, the inverse or the 100 minus 60% is the 40% cost ratio. So, to get our cost of goods sold, it's basically multiply your net sales by your cost ratio. So, what does that mean? Again, for this estimation methods, what we care about would be, ano ba yung cost of goods sold natin? So, to get your cost of goods sold based on sales, what you need to do is to first get your cost ratio. So, my cost ratio is 40%. So, I know my net sales is 1,000 multiplied by the cost ratio of 40%. That will help you get your COGS of 400, which is what we want to estimate, right? So now we move on to the next scenario. Any questions in cost ratio based on sales method? Kindly ask them now before I add the next scenario. Or hindi tayo mali. Okay. Kung wala ng questions, we can go to based on cost. So again, we have the same scenario. The only difference is 60% of the gross profit rate is based on cost. Now, mag-iiba. See, magkaiba yung COGS natin, magkaiba yung gross profit. Even though same sila ng GP rate, iba kasi yung basis nila. On the left, it's sales. On the right, it's cost. Now, context clues. Based on cost. So, ang 100% natin, hindi si net sales. Ang 100% natin is a cost of goods sold. Right? 625. Let's prove this. The gross profit based on COGS is 60%. If our 100% is 625, if you multiply 0.6, we will arrive at 375 gross profit. So again, we made sense of the 60% gross profit rate based on cost. So if 100% si COGS, 60% si gross profit, we know na mas mataas pa si net sales doon, right? Meaning, net sales is at 160%. Kasi 625, which is 100%, plus 375, 60%, is 1,000. Meaning, 160% yung net sales. And this 160% is the more important percentage. And this is what we call the sales ratio. So pag based on cost, to be able to get your COGS and ang alam nyo lang is net sales, we basically divide our net sales by the sales ratio. So again, we're just looking for our cost of goods sold, right? So, ang alam lang natin is yung net sales natin. And alam natin na 160% yung sales ratio natin. So, therefore, to get our cost of goods sold under based on cost, it's just basically 1,000 divided by 1.6 would be 625, right? So, basically, this is how the fundamentals between the gross profit method. So, it's a bit to consume, but please take your time in absorbing this. The only way you'll be able to master this is to answer mga 3 to 5 exercises. In order to familiarize yourself on the based on sales and based on cost. I can already see that in the exam or in the midterms, alam niyo yung gross profit rate pero mahirapan kayo kung based on sales or based on cost. So make sure na hindi kayo malilito, right? So let's take a look at an example. Our class example, right? So the following data relate to the records of Powell Corp. So as you can see, ang alam natin, si sales lang. at saka si cost of goods available for sale. What we want to find out is what is our cost of goods sold and what is our ending inventory. But the very first thing that we want to know is ano ba yung cost of goods sold natin? And then we have two scenarios. One is 50% markup on cost. The other is 60% markup on sales, right? So the two ways or the two scenarios to use the gross profit method. So for this, we actually have 4 steps in how to solve for this. Step 1, you create your gross profit equation. So again, based on the given, ang alam ko lang is si net sales, pero hindi ko alam si COGS and si gross profit. Then, step 2, understand where your 100% is. Markup on cost means based on cost. Meaning, ang 100% natin is si cost of goods sold and 50% si gross profit. So, if I ask you, how many percentage is 160,000 na net sales, then obviously it's just 100% plus 50%. We know that net sales is at 150%. Kapag based on cost, ang importanteng mahanap natin is si sales ratio. And the sales ratio for this is 150%, right? Now that we know sales ratio, we can now get our cost of goods sold. That's the last step. And again, we know that net sales of 160,000 divided by the sales ratio of 150% will give us our cost of goods sold. So now our cost of goods sold is 106,667, right? So round up lang. And then 50% of that is your gross profit. Just 53,330. So again, if you add your COGS and your gross profit, it will add 260. So if you, what is 100%? 160. So pag 50% of 106 is 53,000. 150% of 106 is 160,000. So again, we were able to get our cost of goods sold, right? So cost of markup naman on sales. So this is based on sales. So sa based on sales, what we want to look for is our cost ratio. So again, step 1, what is our gross profit equation? So again, ang alam lang natin is net sales. Step 2, understand where your 100% is. 60% markup on sale. Meaning, ang 100% natin is si sales, right? So from here pa lang, alam mo na 160 times 0.6, my gross profit is 96,000. Without even having to solve. Pero, we know that 40% of this will be your cost ratio, right? So, alam na natin yung cost ratio. So, we know that 160,000 times naman, the 40% cost ratio would be your cost of goods sold. So, 160 times 0.4. So, alam na rin natin si COGS of 64. And again, si gross profit is 96, right? So, again, if it's based on cost, what you have to look for would be your sales ratio. Once you have your sales ratio, net sales divided by sales ratio would be your cost of goods sold of 106,667. Pag based on sales, ang hinahanap natin is si cost ratio. And net sales times cost ratio will give you your cost of goods sold of 64,000, right? So the last portion of this would be, what would be your ending inventory? We basically just subtracted from the COGAS to get 93,333 and 136,000. So this ends our gross profit method. Are there any questions when it comes to gross profit method? kindly thumbs up if we can proceed to retail inventory. Okay. So we're done with gross profit. Now what's the second one? The second one is more procedural. Retail inventory method. Under retail inventory method, it's saying that as a company, you know your costs. Pero you also sell it at retail. So in essence, there are two quote-unquote prices that we look at. Our cost and our retail. Now sa retail inventory, ang mas alam mo is yung retail values. And therefore, ang alam mo is that you know the cost of goods available for sale at retail and at cost, but we want to solve for the ending inventory at cost. And therefore, what we do is we follow a cost ratio under the retail inventory method so that we can identify paano ba natin ita-transfer yung retail back to the cost in order to get our ending inventory at cost, right? So in essence, its ending inventory at retail times cost ratio is equal to your ending inventory at cost. So for this, retail inventory method is used for companies with thousands of different types of merchandise at low unit cost. So let's take a look at the example. So in your exercise or in your homework, 611 tells you about sporting goods and jewelry cosmetics. So dalawa yung requirements, dalawa yung scenarios under each company. So let's focus on sporting goods muna. So ito yung binigay sa inyo. How do we apply retail inventory method? 5 steps. Step 1, create your cost flow matrix with 2 columns at cost and at retail. So again, super important, you know your cost flow matrix. Beginning inventory, purchases, PRA, PD, freight in, which will comprise your cost of goods purchased. Beginning inventory plus cost of goods purchased will be your cost of goods available for sale. Huwag kayo malilito. Net sales refer only to your retail. And net sales will tell you your cost of goods sold, quote unquote, in retail value. And therefore, you will be able to get your ending inventory at retail, right? So, huwag kayo malito, treat net sales as cost of goods sold at retail, okay? So now, may given tayo. Honestly, copy-paste lang to, pero apply it in the proper format. So, get the beginning inventory first, the purchases, the PRAs, and the purchase discount, and then finally the freight in. Now, add all of these together, you'll get your cost of goods available for sale at cost of 693,000. And then add all of these together to get your cost of goods available for sale at retail, right? And then we get the net sales, which is given 1,000. Again, remember, net sales, you can treat it as parenthesis cost of goods sold at retail. So ang maapektuhan lang is yung retail column. Since cost of goods sold at retail, COGAS minus cost of goods sold, step 2 is we determine the ending inventory. Step 3, we determine the ending inventory at retail, right? So 1,100 minus 1,000 is 100. So our ending inventory at retail is 100. So now, how can we transfer this retail price back to cost? And the way to do that is to get our cost ratio, which is just basically COGAS at cost divided by COGAS at retail, which will give you 63%. So now we know that the cost ratio is 63%. And then madali na lang. Ending inventory at retail of 100,000 times 63% cost ratio is the ending inventory at cost of 63,000, right? So this is the answer for scenario A. Scenario B, December 31 na raw, binigay sa inyo that the cost ratio is at 60%. The ending inventory at retail is 95. So again, madali lang siya. Ending inventory at retail times the cost ratio of 60% will give you your ending inventory at cost of 57,000. So jewelry, we apply the same. First step, you first apply the right format sa given. One column is cost, one column is retail. Step 2, determine the cost of goods available for sale at cost by adding all of these together, and then at retail. Next, alam natin yung net sales or the cost of goods sold at retail. So sa retail lang natin siya ipapasok. So that we know the ending inventory at retail of 40,000. So now that we know the ending inventory at retail, we need to make sure na from 40,000 gagawin natin siyang cost. Pero paano natin siya gagawin cost? Using the cost ratio. So step 4, you get the cost ratio, which is again, co-gas of cost of 780,000 and co-gas at retail of 1.2 million. Which will then give you 65% cost ratio so that you can get your ending inventory at cost by 40,000 ending inventory at retail times 65% cost ratio, which will give your ending inventory at 26,000. Sorry. 11. Okay, sorry. Someone said, can I go to the previous slide? Is this the slide? To the person that messaged me. Is this the previous slide na you're referring? Okay, what's the question here for this slide? Okay. Yeah, okay, got it. Yeah. Kindly let me know kung okay na, kung na-screenshot. So I'll also upload the PDF format for this. Okay, no worries. Yeah, thank you. So basically, sa scenario B of jewelry, it's the same. Binigay sa yung cost ratio, binigay sa yung ending inventory of retail. So you just multiply 64% so that you get 28,160. So the last one na I want to discuss, and then after this, basically it's just gonna be a mastery for cost flow, is inventory errors. Now, out of all of the subtopics, I feel like inventory errors is the hardest. Gross profit method, retail inventory method, as long as you memorize the procedure, that should be a given. LCNRV, as long as you know the procedure, that's a given. Inventory inclusions, as long as you know the procedures, that's a given. Inventory errors takes a bit more analysis. Now, to help us, I want to show you a sample cost flow matrix, net income statement, and asset, liability, and equity or balance sheet for 2 periods for a certain company. So kindly take note of these figures, right? So may beginning inventory ka, so this is cost flow, this is income statement, this is balance sheet, right? And then, kindly take note that this is for 2 periods. So kare, yung ending inventory of 200,000 is the beginning inventory of 200,000. Kindly take note na super important na connected siya, right? Now, we go to errors. Error 1. Your beginning inventory is understated. So as you can see, this is the given. Beginning inventory dapat is 100,000. Nagkaroon ka ng error. The beginning inventory is 50,000. It's understated. So now, that one simple mistake will have a lot of repercussions. And you have to understand what are the repercussions. Number 1, understated si beginning inventory. Since understated si beginning inventory, understated si cost of goods available for sale. Kasi mababa yung beginning inventory. Kapag mababa si cost of goods available for sale, mababa rin si COGS. Right? Pag mababa si COGS, tataas si gross profit. Right? Kasi tinan mo, 1 million yung revenue, Yung tamang COGS is 300,000, pero yung COGS natin is at 250,000. So therefore, yung gross profit natin is higher than what it should have been. And then net income will also be higher. And then finally, our equity will be higher because mas mataas yung net income. So this is a more practical standpoint. Now, ang maganda kay beginning inventory, it does not affect the next period. The error is contained within period 1. So this is a summary of the effects of a beginning inventory understated. So again, there are two ways. Honestly, you memorize everything or you understand why that happens, right? So, yun. So that's error number 1. Error number 2, baliktad. Pag overstated sa inventory, overstated si COGAS, overstated si COGS. Pag overstated si COGS, understated si gross profit, understated si net income, understated si equity. So you can look at the figures and then you can double check for yourselves, right? But generally, this is gonna be the effect of a beginning inventory overstated. Now, ang maganda kay beginning inventory, nako-contain yung mistake sa period kung saan ka nagkamali. The more difficult one is si ending inventory. Si ending inventory, kapag nagkamali ka sa inventory, it affects 2 periods. Period 1, understated yung ending inventory mo. Therefore, your cost of goods sold is gonna be overstated. Again, if your cost of goods sold is overstated, your gross profit will be understated, your net income will be understated. And then, since ending inventory is understated, mababa rin yung assets mo. So it now has an effect on your assets. Mababa si assets. And then, dahil mababa yung net income mo, mababa si equity. So that's period 1. Now, your ending inventory is your beginning inventory in period 2. So now your error will cross over to the next period. Na parang, you treat it as yung beginning inventory mo as understated. So, similarly, na-discuss na natin to in error 1, magkakaroon ka ng effects. So, kindly take note na pag ending inventory yung understated, it will cross over to 2 periods. Right? So, kung sa period 1, understated si net income, sa period 2 naman, overstated si net income. Kaya, si equity, walang change. Parang nagsi-self-correct. Right? So, baliktad pag overstatement. So, ganito. So, in essence, you need to master what are the effects of your errors. Number 1, if understated si beginning inventory or overstated. Number 2, paano kung understated or overstated si ending inventory. So, again, kindly take note na pag si ending inventory, it becomes a 2-period error effect. Now, if it's an understated ending inventory in period 1, it will be a beginning inventory understatement in period 2. Pag ending inventory is overstated in period 1, it will be a beginning inventory overstated in period 2. So it's a 2-period thing, right? Are there any questions before I move on to the exercise? Okay, kung wala, we go to 6.11. In 6.11, binigyan kayo ng 2011 unadjusted and 2012 unadjusted. Now, si Bimbi raw made 2 errors. Number 1, ending inventory in period 1, which is 2011, was overstated. So now, we know na kapag meron kang ending inventory overstatement, it actually affects 2 periods. So we basically just apply. What was the overstatement? 3,000, right? So number 1, yung ending inventory mo raw in period 1 is overstated by 3,000. So anong gagawin natin sa ending inventory? To get the right amount, we subtract 3,000. So again, I need you to understand this. Overstated si ending inventory at 30,000. So the correct value should be 30,000 minus 3,000. So 27,000 is the correct value because again, it's overstated by 3,000. So looking at it from another perspective, sinabi ko sa inyo, ang tamang ending inventory in period 1 is 27,000. Pero ang nakalagay 30,000. So the error is overstated siya ng 3,000, right? So kindly take note, wag malito, right? So now, we have cost of sales na understated. So pag understated, we add back 3,000 to COGS. So dedire-diretsuhin ko na siya. So yung gross profit and net income and assets, wala naman siya sa given, so we can ignore. Beginning inventory mo is understated, ay overstated, and therefore we have to subtract 3,000 in your beginning inventory. Si cost of goods available for sale is overstated, so we have to subtract 3,000. Your cost of sales would be overstated, and therefore we have to subtract 3,000. So again, we're done with correct error number 1. Now, error number 2, ending inventory is understated in period 2. So, since wala namang period na 2013, the period 1 effect will just be understated sa ending inventory mo, so we have to add 6,000. And overstated si cost of goods sold mo, so we have to subtract 6,000. So basically, ganun lang. And now we just apply the changes. So yung 30,000 mo na ending inventory became 27,000. Your 140 became 143,000. Your beginning inventory of 27 na naging 27. Your co-gas is 202,000. And then your ending inventory is 35,000 plus 6,000 is 41,000. And your 170,000 binawasan ng 9,000 to get 161,000. So in essence, we're able to derive our cost of goods sold of 143,000 and 161,000. Right? Next. So that's BIMBI 6.11. Let's take a look at another example. So for this example, mas marami ng affected. It not only gave you your cost flow, it also gave you your income statement. So now, mas marami yung affected, pero we still use the same framework. Number 1, nagkaroon naman ng ending inventory overstatement. So we minus 5,000 in ending inventory, we add 5,000 in COGS, and then we subtract 5,000 in gross profit. Period 2, the mistake will cross over. So your beginning inventory is overstated, so we subtract 5,000. So sa co-gas, we subtract 5,000. Sa COGS, we subtract 5,000. And then finally, sa gross profit, we include 5,000. Right? Let's adjust. So now, the correct one would be ending inventory at 39,000, COGS at 166,000, gross profit of 44,000. And then for beginning inventory, it's the same, ending inventory of 39,000. Co-gas will be 241,000. COGS would be 189,000. And the gross profit is 61,000. So net income is 44,000. In 2012, it's 61,000. Right? So that's basically the ending inventory. So in the last 6 minutes, we'll just talk about the financial statement presentation. Wherein, basically, paano ba natin i-represent? So inventory is classified in your balance sheet as your current asset. And in the multiple step income statement, kindly take note that the cost of goods sold is subtracted from sales. Now, I want you to memorize the required disclosures for inventory. The major inventory classifications is required to be disclosed. The basis of accounting, LCNRV. So alam natin LCNRV. Pero in that particular account, ano ba yung mas lower? Was it recorded at cost or was it recorded at NRV? Pero in essence, it's LCNRV. And the cost flow assumptions. Kindly take note na I only put FIFO in average method because LIFO is not an acceptable method, right? So the last thing na you need to know is the financial ratios. So honestly, this is the more fun aspect of inventory. So when you go to finance, BA 141, I think, you'll know about inventory ratios. There are 2 you need to know. Inventory turnover, which is just cost of goods sold divided by average inventory, and days to sell. which is basically 365 divided by your inventory turnover. I think this is more of a concept rather than theory, but it wouldn't hurt to know how to solve for it. So inventory turnover, better if higher. What it just means is how many times per year the inventory was theoretically sold or turned over. And days to sell is just basically how long it takes to sell inventory. So days to sell is better if lower, right? So that actually ends our theory and all of our exercises for chapter 6. So actually, if you notice, meron pa tayong mga cost flow assumptions. So we have 2 more exercises. But again, I'm not requiring anyone to stay kasi I think it's 11:30. But for the sake of the recording and for the others that were absent today, I just want to finish all of the exercises so that you'll be prepared for quiz number 5. So quiz number 5 will be happening on November 3. And then the long exam or the midterms will happen on November 5. Yun. So, gipit yung timings, pero the assumption is by November 3 dapat ready na kayo mag-midterms. So, practice test nyo na lang si quiz number 6. So, before I go to the recorded portion for mass cost flow assumptions, are there any questions regarding exercises, any admin stuff before I proceed to the last few exercises? If none, kindly thumbs up if everything's okay. Okay. So I think everyone's okay. So kindly give me 1 minute. I'll just fix a thing admin. Pero when I come back after a minute, after that break, I will just answer the cost flow assumption related questions. So starting with 6.7. Kindly give me 1 minute. Okay. So si Joan Company had 100 units in beginning inventory at a total cost of 10,000, right? And basically, it's asking you to solve it under FIFO, LIFO, and then it asks you to analyze. Sorry, nakamute pala ako. So, we're tackling E6.7, and then E6.7, it has a lot of questions, but in essence, it wants you to do all 6, right? And basically, in all 6 methods, FIFO generally will give you same results. LIFO will generally give you different results because they have different procedures. Kapag perpetual, it's stock card. If it's periodic, it's quantity method. And then pag wave, different rin yung methods and therefore different rin yung results. So, let's move to FIFO first. So, FIFO, ang maganda dito is it's both for periodic and perpetual, right? So, in the given, meron lang tayong beginning balance, may purchases lang tayo, and then alam natin yung ending inventory is gonna be 8 units, right? Because binigay siya. So, how do we solve for this? Number 1, quantity method. We need to get the ending inventory quantity. So, how do we do that? We know what would be our cost of goods available for sale. My cost of goods available for sale would be beginning inventory quantity plus 200. So you'll have 300 na hugas quantity. We know that the ending inventory is at 8. And therefore, kung 80 yung natira, I know that 300 minus 80 220 units yung nabenta ko. Now that alam ko na yung ending cost, ending inventory quantity, next question is, what would be the ending inventory cost? And because it's FIFO, and we're looking at ending inventory, it's FIFO-ish. Last is still here. Therefore, yung ending inventory of 80 units, uubusin natin. So, sakto, what is the last batch? The last batch refers to the purchases. So, 200 units, so more than enough. So, 80 units will come from the purchase of 130,000, which will give you a cost of 10,400. So now we know that the ending inventory is 10,400. And then lastly, we complete the cost flow. What is our beginning inventory cost? It's basically 10,000. What is our purchase cost? It's 26,000. Add both of them together to get your COGAS cost, 36,000. We already know our ending inventory cost of 10,400, and therefore our cost of goods sold is 25,600, right? So again, our 36,000 cost of goods available for sale was split to a 25,600 COGS and a 10,400 ending inventory. Are there any questions for FIFO? So we're done with FIFO. And the beauty of FIFO, it's so simple. It's quantity method. How do you solve quantity method? You first focus on quantity, get your ending inventory quantity. From there, you get your ending inventory cost, which would be last is still here. And then after you get your ending inventory cost, you complete the cost flow. Subtract your ending inventory cost to your COGAS to get your cost of goods sold, right? So generally, regardless kung perpetual or periodic, FIFO gives you the same results. Now, let's look at it from the LIFO perspective. And ang pinakamadali sa LIFO is pag periodic. So pag periodic, same quantity method. So alam na natin to. We know that the ending inventory is 80 and we sold 220 units. Now, in LIFO, it's not last is still here, but it is so in LIFO, its first is still here. So we still have the same ending inventory in 80, but now we look at the very first batch, which is the beginning inventory. So it had 100 units, so pasok pa rin siya. So now the 80 units will be multiplied by 100 to get 8,000. And we know that the ending inventory is 8,000. And then we just plug in the cost flow. So 36,000 minus 8,000 will give you a cost of goods sold of 28,000. So again, same method, quantity method, pero iba na yung COGS and ending inventory na lumabas. Because iba yung assumption. So now, we do LIFO na perpetual. And in LIFO perpetual, we do stock card. So how do we do the stock card? Basically, the stock card will be comprised of 3 columns. Your purchases, your sales, and your running balance. And then under each group of columns, you have your units, your CPU, and your total cost. And then for every transaction, you just fill out the stock card. So beginning inventory, ito yung running balance. So ano yung balance as of beginning inventory? May 100 units lang tayo, right? Batch 1. And then we have purchases of 200 units. So what would be our balance? Now, dalawa na. We have 100 units at 100 cost per unit and 200 units at 130. Ngayon, nagkaroon ka ng sale. The sale, gagawin natin siyang stock card. So pag nagkaroon ka ng sale, LIFO. LIFO. So last in, first out. So 220 units yung nabenta. So we first zero out the last one or the last row. So ang nasa last row is yung 200 units. So 200 units, so na zero out yan, so may 20 pang remaining. So may 20 units na at 100 at yung cost. And therefore, your running balance would be 80 units at 100 at 8,000. So our ending inventory is 8,000, and therefore, in terms of the cost flow, 28,000 yung cost of goods sold. So now, if we compare perpetual and periodic, magtataka kayo. Bakit pareho si perpetual at si periodic? So this is an important theory. That LIFO, typically, and then most of the time, like 99% of the time, will give you different results. However, if meron ka lang one sale and one purchase transaction, then they will give you the same results. Pero yun lang yung pag simple yun. Pag one lang, pag one sale, one transaction, or one purchase, same results. But generally, kung nag-iiba na yung mga purchases, nag-iiba na yung mga sales, they will give different results, right? So last, wave. Paano natin gagawin yung moving average? So average method, perpetual, is moving average. Sa moving average, again, memorize the table format. It just has one batch with unit, CPU, and total cost. So again, yung beginning inventory natin. So, and then we had the purchase. So now, as the name suggests, we need to get the balance or the moving average. So to get the balance, we first get the units. So 100 plus 200 is 300 units. And then we get the total cost. 10,000 plus 26,000. May 36,000 ka. Now, we need to move the average. So 36,000 divided by 36,000 divided by 300 units. Your new moving average is 120,000. And important is yung 120,000 because you will use your moving average unit every time you have a sale or a sales discount or a sales return. So now, nagkaroon na sale. So we're gonna use 120. So the sale will lessen 220 units. Pero now at 120, so minus 26,400. So we'll give you your balance of 80 units because 300 units minus 220 is 80 units. And 36 minus 26.4 thousand is 9,600, which will still give you the same moving average of 120. So now we know that the ending inventory is 9,600. So we know that the cost of goods available for sale is 36,000. And to get your cost of goods sold, you look at the transactions that have a sale in it. So itong 26,400 would be your cost of goods sold. And your ending inventory is 9,600. So there are two ways to get cost of goods sold in the moving average. Number one is subtract your ending inventory cost to your COGAS. Or you look at every sale transaction. And then kung ano man yung total cost na lumabas, the 26,400, yun yung cost of goods sold. Right? Next is weighted average. So periodic naman tayo. So kindly ignore. So I think that given is yeah. So in weighted average, basically what we have to do is number one, get your wave per unit, wherein you just add your beginning and all of your beginning and all of your purchases, so that you can get your 300 units and your 36,000, and then you get the weighted average. So 36,000 divided by 300 units is 120. Step 2, apply wave unit to cost flow. Meaning, alam natin that the balance is 300 units. So ang total COGAS natin is 36,000. Our ending balance is 80 units because it was given in the problem. So we just multiply the wave unit cost of 120 to get 9,600. And then yung COGS natin, we know that we sold 220 units. So we multiply 120 to get 26,400. So again, same. Perpetual and periodic for this particular item is the same because there's only one sale in one purchase transaction. But generally, they will result in two different approaches. So now, let's answer the other questions. Which cost flow method would result in the highest net income? So ang answer is si FIFO-ish because it has the lowest COGS. Right? So pag lowest yung COGS mo, uunti yung babawas mo sa revenue and then that will get your highest net income. So let's assume that the revenue is 30,000. So 30,000 minus cost of goods sold of 25, 4,400. Pag LIFO naman, 2,000 and pag Wave, 3,600. So as you can see, with this made-up scenario, FIFO-ish, which has the least cost of goods sold, will be the one that will have the highest net income. Next, which cost flow method would result in inventories approximating the current cost? It's still FIFO because the balance sheet refers to the ending inventory. And the current cost is the last is still here. And therefore, FIFO reflects it the best. Okay? And then lastly, who will pay the least taxes? Si LIFO naman. Why? Because LIFO has the highest COGS, which will give him the lowest income, and taxes are based on your income, and therefore that will give you your lowest taxes. So again, let's assume a 30% income tax rate. From the previous scenario, ito yung mga net income. Si LIFO has the smallest income. If we apply a 30% tax expense rate, you'll see that LIFO will have the smallest income tax expense because they have the smallest income tax. So the answer to D is C, LIFO, right? So honestly, the last one would be the more complicated version. So let's do the two scenarios. So pinapagawa lang tayo FIFO at saka Wave, right? High moving average. So for this, maraming nangyari. Pero ito, this is my tip. Kindly make sure that you follow this format, the table that I'm using. Basically, identify on the first column the units so that you'll be able to quickly derive your ending inventory units. The here on the left side, on the second column, unit cost. So pag binigay sa inyo is the sale price, you put it in this column naman. And then, so that itong first three columns na to will refer to your cost. And then these two other columns would refer to your sales revenue, right? Pero yung quantity is in the first column, right? So again, let's step FIFO, quantity method. Let's get the ending inventory and the quantity of units. What would be our cost of goods available for sale? It's gonna be 410. How did I get 410? 150 plus 100 plus 75 purchase minus purchase return of 15 plus 100. 410 yung ending cost of goods available for sale natin. And then we have 300 units sold. How do we get 300 units sold? 150 na sales minus 10 na na-return plus 50 na nagbenta ka ulit plus 110. So we know that 300 yung units na sold. And therefore, ending inventory is COGS quantity 410 minus 300 units. 110, right? Step 2, alam na natin na 110 yung ending inventory. Step 2, get the ending inventory cost. So last is still here. So we know that the quantity is 110. Now, last is still here. So we'll try to finish up the 110 units. So what is the last batch? It's the purchase on January 23. Pero 100 units lang yun. So 100 units of those would be 2,800. Pero may extra pa tayong 10. So we go to the next one. So meron tayong purchase of 75 units at 24. And therefore, ending inventory is 3,040. We plug in the cost flow. What is the beginning inventory cost? It's 2,550. The purchases, ito yung malaman. How did I get 6,340? It's 2,100 for purchase 1 plus purchase 2 of 1,800. Ay. 2,100 purchase 1 plus purchase 2 of 1,800 minus 360 na purchase return plus 2,800 purchase 3. 6,340. So if I add those two together, it will give you your COGAS of 3,890 minus your ending inventory na alam na natin is 3,040 gives you your cost of goods sold at 5,850. So your cost of goods sold, 5,850 yung COGAS, ay COGS, and then ending inventory 3,040. Right? Next. Alam na rin natin yung gross profit because the sales revenue is 13,350 because I was able to carve it out. And then subtract the 5,850, you'll get a gross profit of 7,500, right? Sa perpetual naman, basically, I want you to remember that in perpetual, which is moving average, your average will only move every time there is a purchase and every time there's a purchase return. Again, super important, I'll repeat it 3 times. The moving average will only change every time there's a purchase and purchase return. The moving average will only change pag purchase and purchase return. Kung may sale return, it won't change. Kapag may purchase and may purchase return lang, right? So, how do we do the moving average? We first add our beginning inventory and purchase 1 unit. So the balance is 250 units. The total cost is 4,650. 4,650 divided by 250 units will give you a new moving average because there was a purchase that happened. Your moving average is 18.60. Now, nagkaroon ka ng sale. Every time there's a sale, you only use the most recent moving average unit, which is 18.60. So you sold at 18.60, 150 units. So yung balance niya will still have the same moving average of 18.60. Pero meron kang sale return of 18.60, so you add back 186. 18.60 pa rin yung moving average. Now, we have a purchase in January 9 of 75 units. We expect our moving average unit to change. So we add the quantity, we get the cost, and we have a new moving average because we have a purchase, 20.79. Then nagkaroon ng purchase return. We expect the purchase moving average to change ulit. So now our units is 170 units with a cost of 3,486. So now from 20.79, our moving average unit is now 20.51. So nung nagbenta tayo, we'll use 20.51 now to get 120 units at 2,460.50. And then nagkaroon na naman tayo ng purchase, so we expect the moving average to be different, which will now be 23.91. We sold, so we used the new 23.91 to get our ending inventory at 2,630.25. So how did I get the cost of goods sold of 6,259? I basically knew that the cost of goods for average COGAS is 8,890. So I subtracted my ending inventory of 2,630. Or you can just look at all the costs related to sale. 2,790 minus the sale return of 186 plus sale of 1,025.50 plus 2,630.25 will give you your cost of goods of 6,259. So to get the gross profit, we know the cost of goods sold. So we subtract it from the sales revenue. And actually, that ends our cost flow assumption. So thank you so much, Anna, Clarence, Jor, Sky, and Nina for staying. I know matagal, pero rest assured I'll upload this for the rest of the class. And that ends our chapter 6. Thank you so much, and have a great day. If you have any questions, feel free to let me know also. Yeah. Thank you. Yeah.
Thank you po, sir.
Thank you, sir. Bye, sir.
Divine,
Have
thank you,
fun sa
sir.
reading break. Have a good break. Bye.